Hey everyone, my name is Ricky. I'm from Sharesight. I'm the customer support team manager. So we'll be doing this webinar on how to get your tax time sorted with Sharesight. I will quickly go through what we're gonna go through today, and again throughout the entire webinar, just feel free to kind of put in your if you have any specific questions, or you can put it on the chat or you can put it on the Q&A. So my plan is I want to go through the basics and then spend more times on the Q&A. So, and before we jump in, again, just a disclaimer. So this webinar is for informational purposes only. So, if you're gonna, please make sure if you have any specific things, go make sure you talk to your accountant advisors. So this is just for educational purposes. Don't take this as any financial advice. So what we're going to cover today is very straightforward. So we'll cover all the things on how to get your portfolio up to date. So make sure all the trades and dividends are all accurate. And I'll show you how to run the tax reports. And I'll jump into the Q&A. So I think this should take roughly about 15-20 minutes, and then we'll jump into the Q&A to answer all your questions. All right, so the first thing is so getting your portfolio up to date. So whether you're new to Sharesight or you've been with Sharesight for many years, I guess you have to make sure all your data is correct, because otherwise, when you run the tax report, it's not gonna be accurate, and whatever you give to your AT or to your accountant is not going to be accurate. So there are two ways that you just have to quickly double check just to make sure all your data are accurate. So I'll just jump into, this is just a demo portfolio. So one way you can do that is use the all trades report. So run the all trades report. And let me just quickly, so what I would do is, set the all trades report to since inception, and then set it to do not group, and then sort the date by, from the most recent trade to the oldest trade. So that gives me an idea of, all the buy and sells that are in my portfolios. So that kind of gives you a sense check of whether you have any missing trades for the financial years, or if there's any, then you have to fix those. But this kind of gives you a very high level just to make sure all your trades from your brokers are in Sharesight. So that's one way. And the other way is, once you've done that, normally another easier way you can check it is, again, just to quickly kind of reconcile the quantity against your brokers, just to make sure everything's correct, like 50 shares, 100 shares, 200 shares. So that will kind of quickly, if you can identify if there's any discrepancy in the quantity, then we have to kind of go into those holdings and kind of try to figure out what are the reasons why those quantity are not lining up with your brokers. So from my experience, talking to a lot of customers, there are a couple of reasons why your quantity, if your quantity is not matching with your brokers, there could be a number of reasons. So obviously the first one is you need to make sure all your trades are correct and imported into Sharesight. So that's one. The second one, which is pretty common, is corporate actions. So corporate actions, so if you have any off-market transactions of corporate actions like share purchase plan, or you might have received shares because you have some sort of merger, acquisitions, or demerger, then yes, in those cases, the quantity will be off. So you have to kind of go in and make those adjustments. We have some kind of help page on some of the corporate actions, but if you're not too sure what you need to do, again, send us a chat or send us an email to support. We're more than happy to help you out. But again, if you have corporate actions like, for example, share purchase plan, you have to make sure you have to add those buys into Sharesight. Or if you have any shares that got delisted because it got privatized, or it got acquired, or went into liquidation, that sort of things, then yes, you have to add a sell trade as well. But again, if you're not too sure, just reach out to support. We're more than happy to kind of help you with that. So corporate actions and off-market transactions will be one of the biggest one that causes your quantity might be wrong. The other one is dividend reinvestments. So when you import all your trades from your brokers, that only consists of all the market buys and all the market sell. So that doesn't include any dividend reinvestments. So you actually have to do that in Sharesight. So I'll just show you. So let's say we just use CBA as an example. So let's say if you have dividend reinvestments with CBA, so all you need to do is go to the edit holdings, and then you just need to turn on the automatic reinvest dividends, apply changes, and Sharesight will look at all the dividends that you receive in the past and reinvest those. So it will create reinvestment transactions based on, in this case, the 2 dividends that I received in the past. And you need to sort of like review and confirm those transactions. There will be cases where after you turn on the dividend reinvestments, the quantity might still be a little bit off, like 1 or 2 shares off. Then in those cases, you have to kind of look at your dividend statements, or in some cases, you just need to log into your share registry. So share registry, either Computer Shares or MUFG, which is previously Link Market Services. So in there, they will have a record of all the dividend reinvestments, how many quantity that you receive for each dividend reinvestments. So you just need to kind of go through that, look at how many shares you receive, and sort of like adjust, reconcile that. So I had a videos that we posted on YouTube. That was about let me see. So we have I made one YouTube about tracking dividend reinvestment plan. So if you have any troubles like kind of reconcile those DRPs, just watch that video. I kind of show you the steps on how to go into Computer Shares and MUFG just to see how many shares you receive for your dividend reinvestments. And then but again, if you have any questions, just again feel free to reach out. So that is so that's one way. So that's how you fix your dividends reinvestments. Now, once you done that, you obviously have to make sure the dividends that Sharesight populates are accurate as well. I would say most of the time, 99.9% of the time, they will be correct in terms of unfranked amount, frank amount, or franking credits. So those calculations will be accurate. For if you own like ETF, I'll come back to that later because ETF is a bit more, I guess, complex with a lot of like components going on. But if you own individual shares like CBA or BHP, most of the time the franking credits, the net payment should match what you receive in your bank account or in your brokerage account, as long as you make sure all the buy and sells, DRPs, everything is accurate, and then make sure you confirm that. One thing that I think sometimes that comes out a lot. So these are for if you own non-ASX shares. So if you own non-ASX shares, so I'll just use Apple as an example. So we do see that sometimes some people would say, okay, my dividends are incorrect. The numbers are wrong. Why is it wrong? And I would say most of the cases has to do with the withholding tax. So this is something that you have to kind of double check as well. So in Sharesight, the foreign withholding tax is default to 15% in this case for all the US dividends, because we assume that is what most people will have if you have complete the W8BEN forms. You get the 15% because of the tax treaty benefits between US and Australia. But if for whatever reason you did not complete the form, your rate might be 30%, or some other circumstances, it might be other different percentage. So if it's different, you need to make sure that you kind of come into the edit holdings, and if it's 30%, then you just need to make sure you apply that and that will get applied to all the previous dividends. But you have to make sure they are unconfirmed. So they will get applied to all the previous dividends and all the future dividends. So that's just something, if you own any non-ASX shares, just need to make sure. And then the withholding tax will be different, if you own shares in Hong Kong or in Europe, or so it depends. So, but it's just something that we normally see, people, when the dividends are incorrect, this could be one of the reasons. And then, yeah, so once you confirm, make sure all your buy and sells are correct, all the corporate actions or any off-market transactions are being, all of them are correct, and you make sure your dividends all of them are correct, then you should be able to run your tax report. So the tax report, we have two tax reports. I'll go through. The first one is the capital gain tax report, and then I'll go through the taxable income report. So you can find all these reports in the reports tab under tax and compliance. So you can see taxable income reports. That's the other one, and the CGT report. So I'll walk you through the CGT report first. So CGT report, I would set this to last financial year. Okay, so the CGT report is the report breaks it into short-term capital gains. The main part is the short-term capital gains, long-term capital gains, and capital losses. So here you can see there's non-discounted capital gains and discounted capital gains. So these are sort of related to ETF components. So if you don't own any ETF, you shouldn't see these two. So it's mainly short-term, long-terms, and the capital losses. So when you import all your buy and sells and adjust for any corporate actions and dividend reinvestment, Sharesight will calculate your cost base, and when you sell those shares, Sharesight will show you the purchase date when you bought the shares, and when you sell the shares, and then how many shares you sold, what is the cost base, what's the sale value, and what is the capital gain. So again, it depends on the date of the purchase and when you sell it. Sharesight will either categorize that as a short term or a long term, or in cases where it'll be a capital losses. So what Sharesight, after Sharesight does all those calculations, Sharesight will show you the summary parts. So the summary parts would be your short-term gains minus all the capital losses, and that will give you a capital gains after losses, and you will look at your long-term gains and then apply on any capital losses if there's still any, and then you will calculate your CGT concession, which is your CGT discount. So for individual, it'll be 50%. So it'll be 50% of this amount, and then that will comes to your net capital gain for the financial years. So that's kind of very high level. The other things that you can do on the CGT report is the losses carried forward. What's wrong with this function? All right, okay, yeah, so losses carried forward. So if you have any capital losses from your previous financial years that you need to apply for the 2025 financial years, you can do that. So again, just give you an example. So let's say if I go back to 2024 financial years. So if I come down here, okay, so in this example, I have about $2,262.50 in capital loss. I can apply that to the 2025 financial years. So I'll put it in here. So if I apply that capital losses here, it will show up on the summary. Sorry, it will show up right at the capital losses. So it will sum up with the capital losses to get a total loss, and that total loss will be applied to kind of offset your short-term gain, and then goes through the calculation of long-term gains, the discount, and what is your capital gain. So that's one. So that's something you can do with your, if you have any capital losses that you want to carry forward to the current financial year, or if you have any that you want to carry into the coming financial year as well. So that's the losses carried forward. Another thing that you can do is the sell allocation methods. So Sharesight by default, I mean, this is applicable if you have like multiple buys and multiple sell, right? So Sharesight by default uses a FIFO method, so first in, first out. So if you sell your shares, Sharesight is gonna pick it from the first buy parcel, followed by second buy parcels and third buy parcel in that sequence. But you have the options that, if you want to choose other options like LIFO, maximize gain, minimize CGT, so you can do that. One thing that you want to make sure is if you change your sell allocation method from one financial year to the other financial year, you want to make sure that you log the report just to make sure that Sharesight doesn't go and pick the parcels that you have previously sold. Because if you're just using the same allocation method, it doesn't really matter. You don't need to log your report. But if you do change your sales allocation method from one financial year to the other financial year, you have to make sure you have to log your report. So I'll just kind of give you an example. So let's say we go back to 2024 financial year again. So let's say all the previous financial year you've been using, let's say first in, first out. So what I would do is I can log this. So it will tells you. So Sharesight is gonna tell you that it will log between 15th of June 2020 to 30th of June 2024. So when you start logging your report, Sharesight will always log it from the very beginning. So from the very beginning. So in this case, the first buy happens in the year 2020. So it will start from there and you'll go all the way to 30th of June. So if I log this, so everything will be logged. And then if I run the last financial year, so for 2025, so if I want to go and change my sell allocation methods, you can see there's a log here that is being created today from this period to 30th of June 2024. So what that means is that you will make sure that when you change your methods from for financial year 2025, it doesn't affect what has been done previously, because you don't want, you don't want, when you sell some shares here, you don't want to you don't want Sharesight to go and pick those buy parcels that you have already used up and exhausted in the previous financial year. So one way is to lock the system, and then you can change it to minimize gains or some other options if you want. The sell allocation methods you can apply, you can use one allocation method for the entire portfolios, or you can, if you want to play around, you can select your own sell allocation method for individual holdings. So so that's something for you to kind of explore and play around. So that's pretty much the CGT report, and I'll go through the taxable income report. Okay, I guess when you are filing for your own tax return, most of the information that you get will be coming from the summary section. Will be coming from the summary sections. So if you need to report on your current capital gains, your net capital gains, any capital losses or any losses carried forward on the My Tax portal, if you're doing your own tax return, most of the information will be here. And then the other one, so the other one would be the taxable income report. So this report shows you all the dividends, income, and distribution that you receive from all your shares or ETF. The report is broken down into local income, so non-trust income and trust income. So non-trust incomes are the ones that you get from typical shares, individual shares. Trust income, that will be normally your ETFs or managed funds. So Sharesight will already you don't need to decide whether something is trust or non-trust, because Sharesight already does that for you. So the trust income will have all your ETF like VAS, IVV, or other all kinds of ETF. And then the last section would be the foreign income. So the foreign income is all your dividends from non-ASX shares. It will say, and then the last part will be the income tax return. So once you make sure all your dividends are accurate, Sharesight will kind of calculate all those numbers and kind of preview all of this into the income tax return with the tax label on the side. So when you enter those, so you can kind of just easily enter those amount into my tax, following the labels. And yeah, so that's pretty much the taxable. The one thing that for ETF, so as you know, if you own ETF, you will receive the annual tax statements at the end of the financial year. We do have the data. We have the finalized tax component data for most of the fund providers, so like Vanguard's, Beta Shares. What's the other ones again? We have some for Global X as well, Beta Shares, Vanguard's. So yeah, so we will have populate all those information into your portfolios. But I would say one thing you just need to make sure is when you receive the annual tax statement, it is still a good idea to kind of quickly double check just to make sure the numbers are correct. So just to make sure the numbers sort of match up with what is in your annual tax statement. So recently, I think we made a video. We made a video as well. Hang on, give me a second. So we made a videos on how to kind of enter your Australian ETF components for 2025 as well. So you can watch that videos if you're not too sure what you need to do there. But most of the cases we already populate those informations. But there will be cases where if you own any managed funds or LIC, we don't have those information, so you have to manually enter those information into the annual tax components here. So that's kind of for the taxable income reports. And the last thing is just more like sharing with your accountant. So if you have if you are not doing your own tax return, you can share with your accountants. There's a settings here you can share it with them. So there's two ways you can do it. One is you can share it with them over here, or the other way is you can just run the report. You can run the report, download the report either in Excel or PDF, and then kind of share it with your accountants. I know there are some accountants on the webinar today as well. So I think if you are using Sharesight to manage your clients' portfolios, there's a couple other reports that will help you as well. So first one being the all trades report. Again, all trades report, if you kind of just want to do some sort of like making sure the trades are correct against the trade confirmation, just to double check all the all the brokerage and all the cost base are accurate. This is one report that you can use, and the other report is the historical cost report. Historical cost report. So if you have clients that have like SMSF, you can run the report, because this report shows you like the opening market values and the closing market values for the financial year. So that is those are kind of information that you can get from the historical cost report. And I think I sum up kind of briefly all the tax report they can use on Sharesight. I guess we'll kind of jump into the Q&A. Okay, so the questions is about receiving dividends and confirming them, whether you need to confirm all your dividends. I would say yes and no. I mean, I do know there are a lot of customers that doesn't confirm their dividends. They just leave it as unconfirmed. And again, I would say nothing wrong with that. You don't have to totally like always confirm them. Although, I mean, the benefit of confirming them is that you sort of, it is just a way of telling yourself that, okay, I've checked my dividends, I've confirmed them, it is correct. So I don't need to, so next time I don't need to come back and recheck it, next time I don't need to come back and ask myself, oh, have I checked it? So yeah, so confirming is just a way of, a way to kind of acknowledge to yourself that, okay, I've checked it against my bank account, against my brokerage account. So that is accurate. So there's not much, I don't need to come back and look at it anymore. But like I say, it is not a compulsory thing that you have to confirm your dividends. Okay. Why are some dividend reinvestments confirmed and some unconfirmed? Okay, so when you add any buy and sell, when you import all your transactions, all your dividend will be unconfirmed. So if there's any dividend that has been confirmed, it will definitely be confirmed by you or someone that you have shared your portfolio with. So I would think that would be most likely the case. So in some cases, if you have confirmed it, it might be the reason why. It might be that you have checked it in the past and confirmed those dividends. So yeah, but whenever whenever you receive a dividend, the dividend will be unconfirmed until you confirm them. So after you reconcile that against your brokerage account or on your bank account, you might have like confirmed them. Reinvestments. Okay, so the question is, can reinvestment be applied to a certain date, or is it applied to all historical dividends? When you turn on the auto DRPs, it will apply indefinitely. So it will apply to all. Okay, this is on the context that if your dividends are not confirmed and then you turn on the auto DRPs, it's gonna apply to all your previous dividends as well as all the ongoing dividends. So in some cases, some companies might have decided not to offer dividend reinvestments. You have to make sure that you kind of uncheck this tick box. Otherwise, Sharesight would just assume that there's dividend reinvestment, and then it would just kind of keep on reinvesting all the dividends for you. So that's just something to keep in mind. Or there will be cases where you might have, at the beginning when you buy some shares, you might receive cash instead of reinvestment, and then at some point you decided to do a dividend reinvestment. In that case, you will have to confirm those dividends that you did not receive the reinvestments. Once you confirm that, turn on the auto DRP, and then the auto DRP will apply to those that you have not confirmed, which you have decided to do the reinvestments, and then you can kind of go from there. So it's a bit, I think it's a bit tricky, but that's normally like the steps that you need to do. Okay, so this one is for CGT methods. So what methods are there? Okay, so for the CGT report, the sales allocation method, right now there's only 5 options. It's first in, first out, last in, first out. I think those two are pretty straightforward. So, first in, first out, just picking the first parcels. Last in, first out, if there's like any, if you have like multiple buys, you take it from the last parcel to begin with. Maximize gain. So this maximize gain is, it just means Sharesight will pick the one that has the lowest cost base to sell. So it will create the maximum capital gains. Minimize gain, that's the opposite. So minimize gain, you will pick the parcels with the highest average purchase price or highest cost base. Same with minimize CGT. The difference between minimize gain and minimize CGT is minimize CGT take into account your into account the long-term discount, so which is at the 50% as well. Okay, so this one, how can you adjust the sell type for holding if it was a specific package that was sold? I believe you're talking about like how do you pick a specific parcels Um, there's a I would say you can do it, but it's not really gonna be very straightforward because right now, there's no way you can pick a specific parcels in Sharesight. But that is something that we are going to do next year or down the line. But definitely we are working on it to be able to select specific parcels. But right now, there's no way to do it. The only way you might be able to do it is to use the lock the lock mechanisms. So it depends how I think it depends how complex it is. There's some way where you can sort of like lock and force Sharesight to just pick on specific parcel by using the lock, and that would be the only way to do it. But if you need any help, we would be reach out to support. More than happy to kind of look at the holdings and figure out how you can do that. Okay, so this question is about implication of including brokerage in the cost base or expensing brokerage. Um, my understanding is you. I mean, based on my understanding about ATL, don't take this as a tax advice. My understanding is you always have to include brokerage as part of your cost base. So when you run the CGT report, when you sell your shares, it will include your brokerage as part of your cost base to determine what is your net capital gain. So I'm not too familiar with about expensing brokerage though. So okay, so this one is about discounted capital gain distribution. Discounted capital gain distribution doesn't at the bottom doesn't match the total of my discounted capital gains at the top of the page. About $2,000 difference. Can you reach out to support? We might have to look into that because it seems like it's something very specific. So probably have to look into the portfolio. So which cell allocation method is preferable? I don't think there's any preferable cell allocation method because I would say it really depends on your goals. Yeah, I would say I mean yes, I mean there'll be some customers that decide to do like minimize gain because obviously you don't want to pay more tax, but there will be some other circumstances where you decide to maximize your gain or use other cell allocation methods. So it really depends on your goals and individual circumstances really. But my recommendation is just to kind of apply all the cell allocation method and see which one works in your situation. So you can apply it and then see you can apply the cell allocation method. Look at the summary. What's the numbers, and then take note of that. Change the cell allocation method. Look at the capital gains again, and then go through all the allocation method and kind of decide which one is kind of more suitable for you. Okay, a question about how far back can you log the data, as in how many previous financial year can you generate tax report? I would say we can go all the way back to 1985 or even before. I think the key question is not about how many previous reports we can do. It's more about how far going back the transactions that you can put into Sharesight. So if you can put something into Sharesight back in 1985 or even pre-CGT before 1985, and Sharesight will still calculate the capital gains and all and dividends. Wait, for dividends and distributions, we do have the data going back into the 90s. So if you put in all your buy and sells from 90s onwards, Sharesight will definitely calculate your capital gains. And Sharesight can calculate all the dividends as well. So I don't think that's like a limitation on Sharesight. It's just more on like what kind of data, what sort of data that you can provide to Sharesight. Okay, so there's a question about why should you sort of confirming your dividends on Sharesight because your accountant can kind of look up onto your ATO record of your incomes. So yeah, I guess for me there's like two answers. So one answer is when you confirm, it's just more for your own planning to understand, that you have checked it that is correct. And the other one is again, I might have like this might not be this might not be the actual questions, but there will be cases where ATO might not have received some information from your brokers. So I do know that some brokers provide information to the ATO. That's why ATO can preview the dividend and distribution when you do your tax return. But there will be some brokers that don't provide those information to the ATO as well. So especially with like non-ASX holdings. I think you mentioned about ASX, but but I would say there will be some cases where you don't. But yeah, in terms of like confirming the dividends, it's just mostly for your own self as well. Okay, so this is back to cell allocation method. Can I lock for multiple periods, such as if I change the cell allocation method more than once? Yes, you can. So I think the general so the general way of most people doing it is they lock it by financial year. So from one financial year to the other financial year, you lock it by 2024 financial year, and then you lock it again 2025 financial year. So across a 12 months period. So you can do that. You can do multiple locks. So that's like totally normal. You have, okay, so this is for non-ASX holdings. So you had a CGT event, so I take that as you sell some shares in Nasdaq. You sell some shares in Nasdaq, you've done your tax return, and then you mentioned about presenting this information to the US tax office, the IRS. You don't have to. You don't have to. The only thing that concerns US tax will be the dividends, which is the foreign withholding tax. So let's say if you buy apples and sell Apple shares, you have to pay the capital gains in Australia you have to report that to the ATO. But if you do receive like dividends and all these things, then anything that I say related to US tax office will just be the withholding tax. There's nothing else you need to report to them really. Okay, so this is sharing with accountants. So if you share your information with accountant, do they see all your holdings? Yes. So if you share your portfolio with your accountant, they will have access to all your information basically. Again, there's a different access level, so you can kind of read only, read and write. Not admin access. Don't give them admin access. Read only, read and write is fine. But most of the cases, if they just want to grab the report, read only is more than enough. So you just kind of make sure that sometimes they might accidentally alter your portfolio or whatnot. Read only is totally fine. But yes, so they will have access to all the reports and all the trades. Okay, so this one is dividend. So how come sometimes the dividend amount in Sharesight does not exactly equal to the physical amount received in the bank? So okay, so you're saying the dividend in Sharesight doesn't match what is in your bank account. So again, I think there could be a couple of reasons. So the first one is definitely you have to make sure your transactions are all in Sharesight, so all the buy and sells. And then you want to make sure at the point where the dividends are being paid or during X date that the quantity is correct. And if that is correct, then I would say the only reason I can think of would be the withholding tax if this is a non-ASX holdings. If it is a ASX holdings, I mean, some edge cases that it might be different is the corporate tax. So Sharesight apply a 30% corporate tax on all ASX holdings, but I do know some ASX stocks, especially like kind of small and medium enterprise, they might have a slightly different corporate tax. For example, like 25%, or I believe for this financial year, there might be some that might be 27.5%. So when that is different, the calculation of like franking credits will be different. So that might be one of the reasons why it is different. Otherwise, I can't really think of why other than those that I just mentioned, why would it be different? Unless you're talking about ETF. Okay. Is there a way to attach tax statement to the tax component pop-up window for your accountant. No, there's no way to do that. But I would say one way you can, so there's two ways you can attach sort of like tax statements, and then when you share your portfolio with your accountants, they can see that. So one way is obviously you can put it here. You can attach. There's a file attachment. So under notes and files, you can attach up to 20 files. But this is not obviously this is not linked to any transactions. Or the other way is you can attach it onto like individual dividends. So those are the only two ways you can attach a file. So you can kind of drag and drop a file over here, and then when your accountant look at your portfolios, they can kind of download the tax statements. Okay, so this one is about ETF. When entering the annual tax component, sometimes the final amount, the final distributions will be about a cent off. I would say it is not really I would say just long story short is just ignore that. So I'll explain why sometimes it is a bit off. So for example, I'll just use VA as examples. When you enter the amount over here, when you enter all these amounts, components. So for example, what's it? Let's say do 100. Because what Sharesight does is, okay, Sharesight will look at, okay, you entered the $100 for this 13U, for example. Sharesight is going to break it into 4 portions because you receive 4 distributions throughout the financial year. And how Sharesight breaks that up is depends on the proportion, on the portion of that individual distributions. So, sorry. So yeah, so what happens is when you enter all those components, once it goes to the end, because of all this kind of calculation, breaking it into 4, it gets into a lot of decimals. Even though Sharesight doesn't show it, all these are kind of break into decimals, like 3, 4, 5, 6 decimals. So at the end, when it kind of sum up all those numbers, because of some rounding, it is normal to have like a cent off. But again, like I said, when you submit it to ATO, you're not going to get into trouble just because it is at 1 cent off or something. So yeah. Okay, this is not really tax related, but if you have 3 Sharesight account and logins, sorry, do I need 3 Sharesight account and login if I have shares for your personal name, company name, and SMSF? No, you don't. So on our paid subscription, you can, depends on the paid plan that you have, you can have all of them under a single login. So you log in one, and then you can add your portfolio for your personal name, the one for your company, and one for your SMSF. So you can have, up to, I'm on the premium plan, so I have like 10 portfolios. But for the investor plan, you can add up to 4 portfolios. So you only need a single login for that. Okay, so this question is about when you are confirming dividends or distributions. There's a tax settings about trust and non-taxable. So I would say in 99% of the cases, you don't need to worry about anything about this. You don't need to, because Sharesight already knows that, we have the data. So by looking at, like for example, BHP, we know it is not a trust income. But whereas for a VAS, we know it is a trust income. So this is automatically done for you. So you don't need to do anything with this. Non-taxable, in most cases, you won't even do this as well. I think there's only some edge cases where, like for example, like some bonds or some tax exempted, some sort of like pool development funds, they are not taxable. So you have to tick that, and then it will not show up in the taxable income report. But I'll say in most cases, you don't even need to do anything with this. Sharesight already done it for you. How do you reconcile Sharesight for the AMIT adjustments? So I'll go back to report. So on that YouTube video, I've kind of shows you how you can kind of reconcile that, but I'll just kind of quickly go through that. So when you So Sharesight does populate most of the information. I mean, we have like the finalized data, so we kind of populate that into your portfolios, into your each of those ETF. But again, when you get your annual tax statement, it is still good to kind of double check, cross check to make sure they are correct. And you will have this in your annual tax statement. There will either be an MIT decrease or MIT increase. So you will. So again, just give examples. Let's say this is $100 that shows up in your annual tax statement. So you put this in here. Then Sharesight will, once you save this, Sharesight will adjust your cost base. So in the future, when you sell your holdings, this will get calculated as part of your cost base. I mean, Sharesight will adjust that accordingly. So Sharesight have a record of all those. Okay, so this question is about SMSF. So you have a SMSF portfolios. Are tax report for SMSF different? My understanding is they are the same. Of course, when it comes to like auditing for SMSF, you will need to provide more information, either to your accountant or if you are doing your own tax. In some cases, so for example, you will need the opening, like for the market value, the opening market value for the beginning of the financial year and the closing market value for the end of the financial year, and you can get that from the historical cost report. But from my understanding is the tax report all works the same for individuals or for SMSF. One thing, of course, you have to make sure is the tax settings over here is you need to make sure it is a SMSF, because the CGT discount is different between SMSF and individuals and company as well. Do you allow stake and Moomoo or just CBA? Your question is not a bit clear, but we do support stake and Moomoo. So we have integration with Moomoo. For stake, you have to we do support the CSV file import and the track confirmation for stake. But reach out to us if that's not your question. Okay, so this one goes back to the DRP. Can you add that some of us did? Okay, so so this one I mentioned just now. So if you have dividend reinvestments that start somewhere in the middle rather than at the beginning, you have to apply the DRP after you've confirmed. So again, I'll remove the auto DRP for this CBA. Okay. So there's no more dividend reinvestment. So let's say I start my dividend reinvestment for the 29th of September, which is the second dividend, and not on the first one. So what I need to do is I have to confirm the first one. So I'll confirm it. So that confirm just means that you're locking the dividends in. So nothing will be changed when you add any transactions or apply any dividend reinvestments. So once I lock that in, I'll apply the dividend reinvestment, apply that. Okay, so if I go back, so once you've done that, Sharesight will not apply the DRP from the first dividend, it will only apply it to the second one. So if you only started your dividend reinvestment, so somewhere in between when you own some shares where previously you received the cash and then you decide to reinvest your dividends, you have to confirm those that you receive in cash, and then you turn on the auto DRP, and then it will apply to all those that you reinvest, and then that's how you do it. Okay, so so this is for historical cost report. So can you get the closing balance for a specific date? Yes, you can. So if you want to get your closing balance for example for the 30th of June 2025, you just need to put the end date as the 30th of June 2025. I mean the start date doesn't really matter. You don't have it doesn't change anything. So if you want to get your portfolio valuation as of 30th of June 2025, set that as the end date, and then closing balance. So that will be the closing balance figure. Okay, this one goes back to losses carried forward. Okay. So the losses carried forward here is under the advanced option. So you need to manually put this amount in here to have it applied to the report. It is not that straightforward. We are working on to kind of make it better. So it's sort of like shares. I mean, because right now, if you kind of go back to the overview page and come back, it will disappear. So you have to apply that again. So you have to apply every time you run the report. So you just make sure you just do that when you decide to export, when you decide to do your tax return or export the report. But we're kind of improving on this one just so Sharesight will kind of have a record of all the previous capital losses and how much you want to apply for the current financial year and how much to carry forward. So you don't have to manually do that going forward. Corporate actions, how do you handle a demerger? How do you handle a demerger? So there are, I mean, again, it depends on the case by case basis, but in a general, the general answers on how do you handle a demerger is you will normally there will be some sort of cost-based adjustment. Again, I'll just use a quick example. Right. Okay. Let's use CBA as an example. So normally, when a company gonna get split into two companies and you end up owning shares in the original and the new companies, normally there should be some sort of cost-based adjustments. So what you need to do is adjust cost base. So there will be a demerger calculator sort of thing. So I think you have to kind of read up to some ATO. There will be some class ruling or that tells you the ratio of the cost base that you need to allocate to the new holding. So let's say 70-30. Then you just put it here. Again, just examples. In some cases there might not be any. So it depends. So you might do this 70-30. So Sharesight will take those amount out from the holdings, and then you have to add that new holdings that has been demerged from the original stocks. Add that as an opening balance. So add that as an opening balance. Put this as the opening balance amount. So again, I'm just using example, right? So let's say that new holdings is let's say that new holdings is 6. You just put opening balance and then you just paste the cost base here because that's the cost base that got transferred from the original to the new holdings. So that's the general case of most cases how the demerger should be. So for the dividend reinvestments, if you used to have dividend reinvestments, and then you stop, that is the same thing. So you would turn on the auto DRPs. You turn on the auto DRP, so it applies to all the ones that you used to have reinvestments, and then once you stop, you just need to turn off the auto DRPs. Is there any plan for the taxable income report to show the dividend that failed the 45-day holding rules? It is not on the plan right now, but I'll just add that in. This could be something that we can consider. The cost base in the CG2 report, yes, it does. It does include the fees and everything that is in the buy. Sorry, it does include all the costs for when buying and selling the share. So when you sell the shares, any brokerage or any sort of fees will be used to kind of remove from the sell value when you calculate the capital gains. Same for buy, it will add any sort of brokerage or fees will be added to on top of your purchase price. I think we're running into like 1 hour now, so we still got a lot of questions that I don't think I have the time to answer, but I'll go through all of them and I'll reach out to you guys. So I'll reach out to you guys for those that I haven't answered. Sorry about that. So because we're just kind of running over time now, so I definitely will send you an email or message you for those questions. I think we'll kind of wrap up right now. Thanks everyone. So I hope I answer most of the question, hopefully. But again, if you have any questions that I haven't answered, just again send us a chat. I mean, I'm more than happy to help you out in terms of like dividend reinvestments or anything related to AMIT adjustments, because those are kind of, I would say, quite complex, and how you want to enter those into the My Tax portal and all these things. More than happy to kind of walk you through the steps. So yeah. So all right. So again, thanks for joining the webinar. I'll see you again next time.